Fed Chair Jerome Powell has officially announced a 25 basis point interest rate hike, bringing us to a total of 5 to 5.25% interest rates. That is our new federal funds rate moving forward. And based on what he said, I'm honestly feeling pretty bullish for the future. And in this video, I'm going to tell you all about why. First, I want to take you to a Barron's article talking all about the FOMC meeting today. The Fed raises rates by a quarter point and hints at a pause. The Federal Reserve raised its benchmark interest rate by a quarter of a percentage point Wednesday in what markets have been betting will be the last increase of this series. Officials called the U.S. banking system sound and resilient in their statement on Wednesday. They noted that it was too early to quantify the extent of the impact banks potentially pulling back on lending would have on the economy and inflation. The move leaves the bank's target for the Fed funds rate at 5 to 5.25%, a level not seen since the Fed cut rates in the autumn of 2007. However, Powell said that they are prepared to do more. Powell left the door open to further interest rate increases should the economic data warrant it, saying that the bank's policy setting committee, the Federal Open Market Committee, is now in data-dependent mode, with decisions being made one meeting at a time. A decision on a pause was not made today, Powell said at his press conference Wednesday. The committee is no longer biased towards tightening, however. Policymakers removed the phrase "the committee anticipates that some additional policy forming may be appropriate," as they have previously included in statements following earlier rate increases from their statement published Wednesday. With that said, though, Powell said that the policy is possibly sufficiently restrictive to break inflation. Some unfortunate news, though: Powell closes the door to rate cuts in 2023. Futures markets are pricing in roughly 3/4 of a percentage point of reductions in the Fed funds rate by the end of 2023 from the current level of 5 to 5.25%. But according to Chairman Jerome Powell, this isn't likely to happen. We on the committee have a view that inflation is going to come down. Not so quickly. It will take some time, Powell said. In that world, if the forecast is broadly right, it would not be appropriate to cut rates. Powell is optimistic that a recession can be avoided. It's possible that this time really is different, Powell said Wednesday. The reason is there's just so much excess demand in the labor market. We've raised rates by 5 percentage points in 14 months, and the unemployment rate is 3.5%, even lower than where we started. Avoiding a recession is, in my view, more likely than having a recession, Powell said, but I don't rule that out either. It's possible that we do have a mild recession. Lastly, Congress and Biden administration must raise the debt limit, according to Powell. From our standpoint, it's essential that the debt ceiling can be raised in a timely way so that the U.S. government can pay all its bills when they're due, Powell said. A failure to do so would be unprecedented. We'd be in uncharted territory, and the consequences to the U.S. economy would be highly uncertain and could be quite adverse. To sum it all up, again, interest rates have risen to between 5 and 5.25%. Fed Chair Jerome Powell said we are currently at a pause point. It is possible we could continue raising interest rates, but if we did, it would be very limited, and it's entirely based on data. They're no longer biased towards raising the interest rates and will only do so if absolutely necessary. For now, we are in pause mode, which is very, very exciting to see. However, rate cuts are unlikely to happen in 2023. More than likely, we're going to stay absolutely even through the end of this year. Powell feels that banks are safe for now. The labor market is strong, which is preventing us from going into a full-on recession and crashing. If we do go into a recession, it's going to be very mild and nothing too crazy. Lastly, the United States government does need to raise the debt ceiling in order to pay all of its bills, and if we don't, then this is going to be uncharted territory. We could see a ton of volatility in the market. For now, though, things are looking like we're just going to continue business as usual. With all that said, this makes me long-term bullish. This means we are extremely close to that Fed pivot where instead of raising hikes, we have now plateaued. We could see maybe a little bit more of a raise, but after that, it's going to be a plateau through 2023. And after that, we should be seeing some cuts as inflation reduces its numbers. This is a historic point in the economy and cryptocurrency as a whole. And with that, personally, I'm expecting to see big moves up from Bitcoin in the coming months. With all that said, let's take a deep dive into the Bitcoin charts and see where I think Bitcoin's heading next in anticipation of the next move up in cryptocurrency. Before I do that, I gotta let you know that all of these indicators you're going to see me use later in this video are on sale. The Trade Confident Spring Sale for up to $450 off. If you want to check it out, links are in the description. I'll talk to you more about that later. For now, let's dive into the Trade Confident metrics. Here we are on the TradeConfident.io website. We're going to scroll down to Bitcoin. I'm going to run through these really quick today. First up, we have the Bitcoin Emotional Index. As the price is decreasing, we are seeing a decrease in the Emotional Index as well, falling back into neutral after we absolutely pumped in here into excited territory. Most often when we see excited, this is where we're seeing moves down. Exactly what happened here. So as the price moves back down here, I'm expecting the metric to drop from neutral into anxious. At that point, once we reach anxious, this is where I'm looking for the next move up in Bitcoin. Heading on now to the Bitcoin volatility breakout detector. We are still in super high volatility for Bitcoin. This comes after some pretty drastic movement, and honestly, I do expect this volatility to continue further. Reason being is we do have a little bit of a drop here before I'm anticipating the next move up, and when we do see that move up, I would not be shocked to see it be a pretty drastic move. This is an exciting time for Bitcoin, and as we move forward, I want us to be paying attention to the Bitcoin whale smart money metric, where we are seeing currently just very little bit of short trade sentiment in the market. It's not really enough to cause drastic moves down, but short trade sentiment is short trade sentiment, and because of that, we could see a little bit further of a drop as whales take money out of the market. Next up is the Bitcoin major support and resistance levels. We are not seeing any major structure supports below us right now, at least not on this chart. The closest is 25,288, but if you watch the future forecast available with the Trade Confident membership from Travis earlier this week, you'll know that it's actually very unlikely we see $25,000 again this year. Instead, we will be looking upwards from now on. However, we do have a descending structure resistance line that we need to be paying attention to for now. I'll show you that exact level where I'm seeing the structure resistance on the live charts, but for now, moving on to the Bitcoin long versus short trades. Nothing to report here. Long trades and short trades are still pretty steady. Nothing to worry about there for now. Next up is the Bitcoin daily trade scanner. As the price moves down, I'm hoping to see a buy signal pop right about here as we saw it back here in anticipation of the next move up. And whether or not this will be a breakout of a descending triangle pattern that we're currently seeing play out, we'll have to see, but a buy signal will indicate the next move up. That's what I'm going to be looking for. And if you're a cryptocurrency trader, it doesn't matter if you trade Bitcoin, you need to be paying attention to the Bitcoin metrics anyways, because where Bitcoin goes, the vast majority of the crypto market is going to follow. If you want to get access, you can grab a membership at the links in the description down below. Just go ahead and scroll down, click show more, and the membership will be the very first link right here. Go ahead and click that. It'll bring you to our membership page. Personally, I recommend the full access for $59 a month, as this will give you access to all 20 coins worth of metrics on our page, future forecast, members only videos and content. The last video that was posted is absolutely crucial, so be sure to check that out. You'll also get access to our scalping trade calls. We are 16 wins, 0 losses with 5 open wins for our traders to take. If you want to follow along with that and get all the information you could possibly need to be a crypto trader, click subscribe now, follow the prompts, and we hope to trade with you soon. With that, let's check out the live charts. Here we are looking at Bitcoin on the one-day time frame. Whales are pushing money into the market like crazy, resulting in a really quick pump. In fact, the Trade Confident account is currently up $5,971 in just the last half hour based on this move up. At the same time, the RSI, stochastic, and 5100 and 200 moving averages are looking bullish right now. Based on how sharply whale money is moving into the market, this tells me we could absolutely break this structure resistance for a move up. This is extremely exciting to see. Anyone trading Bitcoin is likely making money right now, so congratulations on that. However, the trend exhaustion is in its top red section, but bullish signals need to be invalidated in order for breakouts to happen. There is a slight possibility of a drop, so we will be needing to look at structure support right here at $26,600, the bottom of this descending triangle, for a possible move down. But whales really are pumping money into the market, and this is a whales game. So where whale money goes, the price is likely to go too. That is why the price versus whale money flow here is my favorite indicator to track. This right here shows the importance of it right now, and we could be seeing this break out to the top side soon. And personally, I'm hoping this move up will retest structure resistance, the absolute top for this bear market in 2023 so far. I'm hoping we're going to test $31,050. That's the main point I'm looking at for a break up. Move down is looking like 26,660 right now. Personally, I'm betting on a move up, a possible breakout, based on the fact that whales are just absolutely pumping money into the market right now. As long as that continues, I expect the price to continue upwards as well. No matter what happens, we will keep everyone updated. And as a trader, you're going to want to get access to all of these trading indicators, especially the price versus whale money flow. As I said, this is a whales game. You need to be tracking whales, especially get access to the trend dashboard here. This is important for anyone on a free account, especially because it gives you 6 traditional indicators in one. TC top and bottom finder on the move up. We're looking for a sell or strong sell signal. On the move down, we're looking for a buy signal for the next move up. This is going to be crucial moving forward as well. No matter what you get, all of these indicators. You can get all of them, in fact, for up to $450 off. Let me show you how. All you got to do is click the links in the description down below. Just go ahead and scroll down, click show more, and the indicators are the second link. Go ahead and click that. It'll bring you to our spring sale page where you can find $450 off all our indicators. In order to get the best possible deal, that full $450, you're going to want to grab our indicator bundle pack using code SPRING50 for $50 off. The indicator bundle pack will include the trend exhaustion, price versus well money flow, and trend dashboard indicators you just saw me use, as well as a few others for you to try out. On top of this, the bundle pack will include a $400 off coupon for the TC top and bottom finder. That $450 off total will give you access to all 11 of Trade Confidence indicators cheaper than just the price of the TC top and bottom finder alone. If you want to grab the TC top and bottom finder by itself anyways, use code SPRING300 for $300 off. No matter what you get, it's lifetime access for a one-time payment with over 1,200 downloads on the TC top and bottom finder and nearly 4,000 downloads on the bundle pack. You cannot go wrong with these indicators. This person made $950 in one day, $4,300 in just a week, 2,103 days, and it just keeps going on. Absolutely insane what these indicators are capable of. If you want to get access, links are down in the description again. With that, thanks so much for watching. Trade safe, trade confident, and I will see you in the next video.